Trade Academy. I'll be explaining a concept that deals with picking trades in line with your trend direction. Picking trades in line with your trend directions. So this concept goes with your moving averages, most especially when you have the EMAs nicely find out. So now let's begin. But before I begin, I want everyone to know that there is a moving average here. Let me make it a little bit sharp. So that moving average is 50 EMA. So this is it. Now, when you want to trade in line with the trend, the two things you have to look out for is on your H1 time frame, the direction of your EMAs. You can see the directions of this EMA, they are finely spaced out. So this works when our EMAs are finely spaced out. That is the first thing to look out. So the direction is down, so we are looking only to sell. And if we want to sell, we now have to look at the second criteria, which is to sell from our H1 water, which is our 50 moving average or 90 moving average. These two moving averages are my strike zone. They are my strike zone. So now, how do we pick trades? Whenever price comes to give us a rejection from our moving average, from our 50 or 90 on H1, mark that place. So this is the second time price came, but this time around it came to reject 90. This is my 50, this is my 90. So mark that place. So also the third time price came and touched our 50 and then rejected that zone with a tail. So these three zones are opportunities to pick trades. So how do we pick trades? We now have to go to our 15-minute time frame. So when you're on your 15-minute time frame, all you need is something called double top, since we are in a downtrend, or relative equal top. The first hit and the second hit to sell, or mitigation of our first hit. Price could come, might not touch, might just come and mitigate it. So that is the first thing to look out for. Then the second thing to look out for on our 15-minute time frame, this is our entering zone, is for price to touch our measure, which is our 200 moving average. Once price successfully rejects the 200 moving average, that is a strike zone. You can see price came to touch our 200 and gave us an M pattern right there. And all of a sudden, price came to mitigate the second leg, still on the 200, giving us a candle with rejection pin. This is an opportunity to sell. Let's check the next one. You can see, first of all, this created a relative equal high. Now, this is the second time price came to our 200 moving average, gave us the first hit and the second hit, which is kind of double top, then presented us with an M pattern. For what? For a sell. Now the third hit can see price didn't touch our 200 moving average. On 15-minute time frame, we only strike when price touch 200 moving average. Now, this is when price came and touched the 200 moving average, giving us a kind of relative equal highs. Let me call it equal highs. So this is a perfect opportunity to sell down. That is how I use this strategy. Then for Euro GDP, this is an uptrend. Market is going up. Our EMAs are going up. So what we are after is our 50 and 90 moving average. Don't forget 50, which is this light blue, and 90, which is our deep blue. Once price comes to touch them on H1, that is the first criteria. Once price comes to test them with rejection pins, all you just have to do is to mark them out. Mark them out. So that is what I did. Price came to my 50 and 90, and I was able to mark them out. Price came to my 50 and 90, and I was able to mark them out. So I've marked out 3 possible touches. Now to pick trades on Euro GDP H1 time frame, what you have to do is you have to go to your 15-minute time frame. Right from your 15-minute time frame, what we are looking out for is for double bottoms. That is the first criteria. Then the second criteria is price giving us pins to our major, which is our 200 moving average. Now you can see price gave us the first pin, second pin, and third pin, even fourth pin there. This on the major, this is an entering trigger, and when you draw an horizontal line, you can see this is kind of relative equal high. This is an entering signal for you to buy. You stand to make profit. So remember, we already marked this on H1. So this was the first stop. Now this is the second touch on our major. This is an entering signal to buy. Now the third time, this time around, price didn't give us equal low. It gave us head and shoulder pattern. Head, left shoulder, and right shoulder. But the main point of view here is we have pins to our 200 moving average, which is our major. We have pins to it. So, and we also have a pattern. So this triggers makes the market to move higher. So this is how to pick trade in line with the trend. So you have to wait for it before you strike. All you just have to do is go to your H1 and look for a possible touch on 50 and 90. Then go to your 15-minute time frame and look for opportunities to enter from our major.